Thanks. Oh, you're the first, that's awesome.
Oh, I have to do the change button. As the
morning and welcome to today's webcast, Governmental Accounting Standard Board Update. Before we begin, I'm going to play a brief housekeeping video.
Welcome and thanks for joining us. Our webcasts are designed to help elevate your business performance. Transform your future for the better with advisory solutions tailored to your vision and supported by our collective technical resources. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget. You can ask our presenter questions during the webcast by typing a question in the Q&A window and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% or 3 of the 4 polling questions, which we'll ask throughout today's presentation. Polling questions will appear within the slide window. To participate in the polls, please click on your answer and be sure to hit the Submit button to record your response. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget and download your CPE certificate. Don't worry if you can't download your CPE certificate today, we'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our group CPE attendance sheet to receive credit. The attendance sheet is available in our slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit only can be awarded to participants registered as themselves and isn't available for participants who view the on-demand version. As a reminder, the presentation you're about to see is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
Before we get started, I wanted to share our big news that Moss Adams and Baker Tilly have joined forces to redefine accounting, tax, and advisory services for the middle market. It's really exciting, and you can read more about it on our website from the link in the console. Now, I am pleased to introduce today's presenters, Ashley Austin, Principal, Jerry Roberts, Senior Manager, and Anna Waldron, Senior Manager. With that, I'll turn it over to the team for some quick introductions.
Thanks, Kiva. Good morning, everyone, or afternoon, depending on where you're sitting. My name is Ashley Austin. I'm a principal with Baker Tilly and excited to be here with you today. I've been in public accounting for 20 years in September, and I focus primarily with governmental entities as well as not-for-profit organizations. Jerry, I'll hand it over to you.
Thanks, Ashley. My name is Jerry Roberts, and I work in tribal government and gaming industry group. And I've been working with Native American tribes since 2010, providing attest and consultation services. And I'll pass it on to Anna now.
Good morning, everyone. My name is Anna Waldron. I'm a senior manager based out of Seattle. Been with the firm for just about 11 years, and I focus on working with enterprise funds of government. So seen some good representation from my Seaport, Port, Convention Center clients out there, but looking forward to chatting with you all today.
Okay, well, here's our quick agenda. We will quickly go through GASB Statement 101 and 102. We'll spend the majority of our time on Statement 103, Financial Reporting Model Improvements, give a quick update on Statement number 104, and then hot off the press is the Implementation Guide 2025-1, which we will go through at the end. So the first standard we'll cover today is GASB 101. This standard was issued back in June of 2022 and is effective for December 31st, 2024 year ends and after. So many of you may have already adopted the standard and this is old news, but lucky for you, there's only a couple of slides. Just as a refresher, governments do commonly provide benefits to their employees in the form of compensated absences. And this statement requires a liability to be recorded for those compensated absences that are more likely than not to be paid, with just a few exceptions. I'm going to hand it over to Kiva to go through the polling question.
Thank you, Ashley. This is our first of 4 polling questions. Have you completed your adoption of GASB 101 yet? A, yes, we adopted last year. B, yes, it is effective this year and we have completed the work for implementation already. C, no, we need to get on that. And D, no, not applicable to me. I'll give you a few moments to respond. To participate, please click the button next to the answer you choose and hit submit.
Okay.
Yeah.
I'll leave this open for another moment here. Okay, and here are those results.
Thanks, Kiva. Okay, so it's evenly split between, yes, we adopted last year and it's effective. So you over half have already done the work. So I'm going to talk to the 15% of you right now. And I think there's a lot of words on this slide, but I think there are generally 5 things that you need to consider if you are finalizing the adoption or considering adoption process right now. So the first is historically, governments have reported paid time off or vacation only. And at times this vacation liability has not included the related benefits and payroll taxes that are associated with that leave. GASB 101 does now require that compensated absences include those salary-related payments as part of the overall liability. So that could potentially be a change to the way that you calculate your compensated absences liability going forward. Number 2, sick leave is by far the most applicable item that will need to be considered under the new standard. So even if sick leave is not paid out at termination, the compensated absences liability should report any leave that is more likely than not to be used for time off or otherwise paid in cash. So that amount is going to be largely a management estimate of what is expected to be used of the amount that's accrued at the end of the year for sick leave. And among my client base, there's been many different methods of identifying and calculating that liability that ends up being recorded. Number 3, as it states on this slide, as with all GASB standards, this doesn't apply to immaterial items, but to really understand if it's immaterial, you still need to document your consideration of the liability and then provide that documentation to your auditors so they are able to validate that the amount is appropriately not material and not being recorded. Number 4, this will not change how compensated absences are reported for governmental fund financial statements. So the amount reported for a governmental fund financial statement should be the amount that normally would be liquidated with expendable financial resources, so no changes to your governmental fund statements. And number 5, uniform guidance does allow for accrual basis, so these costs would generally be allowable to charge to grants, so that's good news there. We'll now go to Statement 102, which was issued in December of 2023 and is effective for years ending June 30, 2025 and after. This disclosure-only standard introduces the concept of two new terms, concentration and constraint. So a concentration is a lack of diversity related to an aspect of a significant either revenue or expense. So an example might be a percentage of your employees that are part of a union. That could be considered a concentration. A constraint is a limitation that's imposed by a third party or a formal action of the government's highest level of decision-making authority. An example of a constraint might be limits the government has on raising revenue or incurring debt. Disclosure, as I mentioned, this is a disclosure-only standard. So disclosure is required only when the following three things occur, which are outlined on this slide. A concentration or constraint is known to the government prior to the issuance of the financial statements. The concentration or constraint makes the reporting unit vulnerable to the risk of a substantial impact. And an event associated with that concentration or constraint that has been identified could have a substantial impact within 12 months of the date the financial statements are issued. In order to evaluate if this type of disclosure is required and will need to be included in your financial statement disclosures, will need to be an annual exercise, and that needs to be documented by management based on a review of the government's potential areas of concentrations and constraints. So the government may need to look outside the accounting department, other key stakeholders, look at the meeting minutes for the governing body, talk with leadership. Those all will need to be considered and documented. So we as auditors can also evaluate if disclosure is necessary. And since this is a disclosure only, you'll have to reevaluate it on an annual basis. It is our understanding, based on listening to various GASB presentations, that this standard will likely not result in many new disclosures. In fact, since the criteria for disclosing a concentration or constraint are now specifically outlined in the standard, you may be able to, in fact, review your financial statement disclosures and potentially remove disclosures that were previously included, since no event has occurred or is likely to occur within 12 months that would require the disclosure. I will hand it to Jerry to take us through part of Statement 103.
Thank you. So Statement 103 is financial reporting model improvements. So the GASB went back and took a look at some of these older statements, statements 34, 35, 37, 41, and 46. And they went through and looked for things that could be improved so that financial statements between different GASB reporters are more consistent. And these changes are effective for fiscal years beginning after June 15th, 2025. So for most of you, it'll be for your fiscal year 2026 audit period. Earlier application is also encouraged if you want to get a start on implementing the standard. And just to provide some additional context here, so we also have a lot of folks from different industries attending our webinar today. So again, I work in our tribal and gaming group, but we also have several participants joining us from city and local governments. We have some not-for-profits, some utilities, some airports, and even some hospital and healthcare systems that all follow GASB. So if you think about like all those different types of GASB reporters, this statement is intended to make the financial reporting between all these different GASB reporters just more consistent. So there's a lot here in GASB 103, and we'll go over each of these in our presentation today. So the first two have to deal with financial presentation for proprietary funds. And then we'll get into management's discussion and analysis, budgetary comparisons, major component unit presentations, and then unusual or infrequent items. And so we have our next polling question, and I'll hand it off to Kiva.
Thanks, Jerry. So this is our second of 4 polling questions. Have you started preparing for GASB 103 financial reporting model improvements? A, yes, we are well underway on our analysis. B, no, still recovering from our last 4 years of GASB adoption. C, just getting started. As a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions. Okay, it looks like we have about 84% of responses in. I'll leave this open for another moment here. Okay, and here are those results.
Great, thank you, Kiva. And this looks like it's a lot of people are just getting started on this, and other people are still recovering from the last 4 years of GASB adoptions. You know, they've been coming, it seems like every year there's something new to include in our financial statements for adoption. So one of the things, the first topic here is for proprietary funds. So they went through and they added a definition for what goes in operating and non-operating revenues and expenses. So under the current guidance from GASB statement number 34, governments were required to establish a policy that defines operating revenues and expenses, and then disclose the policy in the notes to the financial statements for how those determinations are made, and then use that consistently from period to period. So in an attempt to get all the other GASB reporters to have more consistent reporting, you know, they went through and they made these definitions to make it, you know, more clear what's operating and non-operating, and not, you know, judgment based on, you know, the different reporters on what should go into operating and non-operating. And so this was also meant to align with the different parts of the statement of cash flows and what goes into cash flows from operating activities and the other sections of the cash flow statement. So GASB statement number 103 defines, so operating is activities other than these non-operating activities that it lists here. And so they've also included this new subsidy definition, which we'll get into in a later slide. So subsidies received and provided, revenues and expenses of financing, resources from disposal of capital assets and inventory, investment income and expenses, and then contributions to permanent and term endowments.
Oh, yeah.
So anything that's not included in that non-operating category can go into the operating revenues and expenses in your income statement. So here's an overview of the subsidies. So the subsidies classification will be used for non-exchange transactions between other parties and funds within the government. So you know, the first 2 bullets here on what the subsidies are meant for, you know, if we think about a utility, it could be from the, you know, the governmental activities to help keep future fees and charges lower that are charged to, you know, the citizens, or to provide a subsidy that will be recovered through current or future pricing policies that are issued by the government. And then all other transfers will be reported in a new subtotal will be included in the non-capital subsidies. And so we'll go over an example of what this looks like. So these are exhibits. Well, this one is one that we put together. So you can see here, after operating expenses, you have your operating income line. And then this is a example of a casino financial statement, income statement. And so then they have non-capital subsidies. So they receive transfers from the tribe in a non-exchange transaction where the tribe provided $450,000. And then after that is a new total line that should be used after the implementation of GASB 103, which is operating income and non-capital subsidies. And this is meant to be better aligned between all the different types of issuers. So this is more consistent with commercial operations and not-for-profit reporting. And then after that, you would have your other non-operating expenses. After the new non-capital subsidies, then come the non-operating revenues and expenses after that for those other items such as investments and other financing costs. So here's like another example from a city financial statement. And this is Exhibit 8 of GASB 103. And then, so as I said, it's more comparable to the commercial and not-for-profit entities. So you see the non-capital subsidies there. There's the transfers in and transfers out. And then if you look at the category under that, the other non-operating revenues, you'll see a transfer in restricted for capital assets. So that is capital related financing. If we think about what goes into the cash flow statements, there's the cash flows from capital and financing activities. So that's the differentiation. So not all transfers will go in the non-capital subsidies. The ones that will go there are the ones that are typically not related to purchasing capital. And then, so here's a comparison to the statement of cash flows. And so this is Exhibit 9 of GASB 103. So you can see here the operating subsidies received and provided. If we go back a slide to the previous example, if you look at the total transfers in and out in that non-capital subsidies section, it now more easily flows into the cash flow here. So you can tell that there's a non-capital financing activities, and it's one-to-one from the income statement over to the statement of cash flows. And then that other transfer that I pointed out, the restricted for capital assets, that would go in the cash flows from capital and financing activities. So next we'll go over management's discussion and analysis. So like as I mentioned earlier at the beginning of the section, so we have a lot of different GASB issuers attending our webinar today. So all the different readers of these different financial statements, they all have different levels of knowledge and sophistication about governmental accounting and finance. So the MD&A is really meant to give management a way to communicate to the readers of the financial statements some of the things that are happening with your entities, and provide some additional context behind the financial statements. So they took, again, so MD&A, this came out with GASB 34, and GASB worked on improving it to make it better going forward. So it provides an analysis of current year balances and activity to explain why the balance and results changed from prior year, avoid unnecessary duplication, and avoid boilerplate language. And then also, the main focus here is on primary government. If you have discrete presented component units in your government, you can still include a discussion of that in your MD&A, but it's a matter of management's professional judgment about whether they would like to include that in your management discussion and analysis. And then going back to like the second bullet here, so for like the analysis, they really want improved discussion here about what caused changes versus simply presenting the amounts and the percentages that changed, and not providing any additional discussion on what caused those changes. And so we'll go through some examples that are included in the GASB 103 statement. So the guidance provides 5 different sections that are included in management's discussion and analysis. And so we'll go over each of these. So the overview, this should include discussion of the basic financial statements, that's the governmental activities and business type activities, and the relationships of the different statements that are in the financial statement package. And it should focus on significant differences in the types of information that each of the financial statements provide. So like the differences between governmental activities and business type activities, the balance sheets and the income statements and how they're different. The next section is the financial summary. So this has always been required, and it should compare current year to prior year for both governmental activities and business type activities, and summarize the changes. And then a detailed analysis for each of the governmental and business type activities. So go over the what changed in the amounts and percentage changes, and explain why those occurred. And we'll get into that a little bit more in our next slides. Then every major fund that's reported should have a paragraph or something explaining about the changes in those respective funds. And then to avoid duplication of discussion of significant changes in capital assets or long-term liabilities, because that might be one of the significant changes in governmental activities or business type activities. It's recommended just including a statement to refer to the significant capital asset and long-term financing activity section, rather than having the same disclosure in both places. Just saying that we had a significant infrastructure project, and we took out new bonds. So you can point to that capital asset and long-term financing section instead of having it in both places. So this is the next section after you go over the primary government and the major funds. Then the next section is for significant capital asset and long-term financing activity. So this would include discussion of any intangible capital assets that are new during the year, discussion of any other significant additions or disposals of capital assets, discussion of any other significant policy changes and economic factors. And then, as I said, avoid duplication between the analysis and this part of the discussion and analysis. And then the long-term financing would include the analysis for debt, leases, PPPs, and subscription-based IT arrangements. Discuss any new agreements, so if there are any new debt agreements entered or any new bonds issued, that would be discussed here. Any changes to the credit ratings, and then any changes to the debt limits. Discuss any significant policy changes as it comes to reporting long-term debts. And then again, just avoid duplication from the other sections. And then, so the fifth and final section here is the currently known facts, decisions, and conditions that are expected to have a significant effect on financial position or results of operations in the subsequent year. So for a lot of us attending the webinar today, usually, there's like an annual budget period. So you can look at your budgets for like the next fiscal year and kind of talk about in this section some of the like what you're expecting to come in the future period. So this could include trends in relevant economic or demographic data, what went into creating next year's budget, what's impacting revenues that are available for appropriation, or changes in rates and basis of activities, any other planned spending that will be going on in the next year, what the impact is of inflation or new labor contracts or changes in the programs offered by the government. Some other the next bullet, expected changes in budgetary net position or fund balance. So taking a look at, like, do you expect net position to increase or decrease in the next period, and give some context as to why. And the other actions the government has taken for post-employment benefit plans, any capital plans, so purchasing of capital assets, any plans for like new leases, PPPs, or IT arrangements, and then other actions from like third parties or things such as new laws or regulations and the impact that that's expected to have on your government. And so here's Exhibit 1 from the GASB 103 statement. So again, it's really stressing that the MD&A really should explain why a change occurred, versus just saying like, revenues exceeded expenses because revenues went up and expenses went down. It wants a more detailed like explanation of, what caused that change. And so in this snip here on the slide, they have a paragraph and it's talking about the revenues and why they continued to exceed expenses in the current year, and how that ended up increasing that position. So they gave 6 different reasons here. So they had more grant revenues, particularly for capital assets. They had growth in various revenues due to strength of the national and local economies. There was a law that requires a portion of the sales tax to build up a financial emergency fund. There was increases in expenses for other programs and functions. They had transfers to their business type activities, going back to what we're talking about in the proprietary fund changes, so like transfers to the business type activities for subsidies. And then, number 6 here, any damage related to, natural weather events like floods or fires or earthquakes could have an impact on the current year financial statements. And again, so no more ladder elevator explanations. So X went up and Y went down. Just more detailed discussion over, what's causing these changes. And again, this is a continuation of Exhibit 1 from GASB 103, which can be found on the GASB website. And then, so in my industry group for working with tribes, and this is applicable for all of the governmental reporters here, there is an option to omit management's discussion and analysis, and that's typically changes one of the paragraphs in our independent auditors reports. So there's the required supplementary information paragraph, and basically it's modified to say that management has decided to omit management's discussion and analysis, and then the final sentence there, our opinion on the basic financial statements is not affected by this missing information. So I know in tribal governments it's optional. I think for some city and other governments it's required in order to receive the certificate of achievement from the GFOA. So I'll pass it off to Anna now.
All right, thank you very much. So I will continue us on this journey going through GASB 103. As Jerry mentioned, this is a big statement, lots to unpack. Still got a couple of topics to cover under GASB 103. So the next set of changes included in GASB 103 are related to budgetary comparisons and then major component unit presentation. So we'll start first with going through the changes around budgetary comparisons. So at a high level, Governments are now required to present their budgetary comparisons as required supplementary information, so RSI, and can no longer have an option to include that information as part of the basic financial statements. So just a movement of that information versus anything being new there. And then there are some new requirements to specifically include variances from final budget to actual, and then original budget to final budget. And these apply to governments that have a legally adopted annual budget. So here is an example that came from the GASB statement, which I think just does a good job of kind of helping us visualize what this will look like in practice. So the first thing, want to look at the heading and see that now we're capturing the requirement to include this as RSI, required supplementary information, and not in the basic financial statements. And then we see the addition of the two required variance columns. So we've got variance of original budget to final budget, and then variance of final budget to the actual amounts. So in addition to the budgetary comparison schedules, there should also be notes to the budgetary comparison schedules that are covering the required disclosures over explanation of budget variances. This is an example that comes from the GASB statement. They've chosen to demonstrate their note variance analysis in tabular form. So it's set up as a table. However, they do call out that's not a required presentation. Use of paragraph sentences are also allowable, but this does a good job of highlighting how to call out those variances across your budget schedules. And I did also want to call out, there are many state and local governments that have budgets that actually have a force of law, but there are also many clients that we work with, for example, many tribes that we work with, that don't have a legally adopted budget, in which case there isn't required changes as a result of this part of GASB 103. This relates specifically to organizations that have legally adopted budgets. And again, it's a move of this information down into the RSI and then making sure you've got those required variances outlined. All right, another component of GASB 103 is presentation for major component units. And so previous guidance over major component unit information allowed for more than one method for governments to use for communication. So previously, the guidance did allow organizations to present their major component units by either presenting each major component unit separately in the organization's financial statements, the statement of net position and activities. Alternatively, you could include a combining statement of major component units in the financial statements, which came after the fund financial statements. And then the third option was presenting condensed financial statements of major component units actually in the notes to the financial statements. So the change here is that governments are no longer able to present that condensed financial statement of major component units in the footnotes. GASB 103 requires that organizations present each major component unit separately in the statements of net position and activities. The caveat there is if the government determines that that would reduce the readability of its statements. If you do determine that that would impact the readability, then government should instead be using those combining statements of major component units. That's included as part of your basic financial statements and would fall after the fund financial statements. The board also, as part of kind of doing a deep dive in this area, did spend some time considering whether any changes were needed to the definitions of major component unit. They concluded that there were no changes needed. It should be an evaluation based on the nature and significance of a relationship that a component unit has to the primary government to determine if it meets the qualifications to be a major component unit. And that is discussed in paragraph 51 of statement 14. And so those different definitions have not changed. Okay, and then the last part to cover in GASB 103 are some changes related to presenting unusual or infrequent items. So previously, GASB Statement 34 required that resource flow statements separately presented transactions and other events that are both unusual in nature and infrequent in occurrence as extraordinary items. And then transactions or events that were determined to be within the control of management and either unusual in nature or infrequent in occurrence would be special items. So as you're all familiar with, previously we had extraordinary and special items in the financial statements. The GASB spent some time consulting with stakeholders and users of the financial statements about what was truly helpful information regarding these special items and extraordinary events. The GASB did identify that in practice, organizations being able to determine whether an item is both unusual in nature and infrequent in occurrence, or whether the item has only one of those characteristics was challenging for governments who are preparing these statements. And so the point of this change is to simplify the process for identifying and presenting those items in the financial statements. So the board concluded, instead of special and extraordinary items, now all items that are determined to be unusual or infrequent should be presented separately in the financial statements. And that's regardless of whether that item is determined to be within the control of management. And so unusual or infrequent items are transactions and other events that are either unusual in nature or infrequent in their occurrence. And statement 62 should still be used to define those terms of what meet the criteria as unusual in nature and infrequency of occurrence. So with the new changes, government should present the inflows and outflows that are related to these unusual or infrequent items individually as the last presented flow of resources prior to showing the net change in resource flows. Inflows and outflows related to each unusual or infrequent item need to be presented separately, and you should not be netting the activity for a given unusual or infrequent item. And then governments do need to disclose in the notes to the financial statements the program, function, or identifiable activity to which that unusual or infrequent item is related. And then, if applicable, also disclose whether that item is within the control of management. So let's look at an example. So this is an example that comes from the GASB statement. On the right-hand side is an example note disclosure that you would include in your financial statements for an unusual or infrequent item. So the example here says Sample City experienced a flood during March of 2025 that was a catastrophic event outside the control of management. The city incurred expenses to clean up the flood damage in the amount of $10 million, attributable to functions of public works and public safety in the amount of $8.35 million and $1.65 million, respectively. Sample City also received $2.5 million in grants from the state to assist with cleanup efforts. So here we see they're including the required information by stating whether the event was outside the control of management. And then the other required part of the disclosure is that you're including the functions or programs that the event related to. So they've called out here the functions of public works and public safety. On the left-hand side, it is an example of how this would look in your financial statements. So now we see a change to the header of this section. Now it's referred to as unusual or infrequent item. This is occurring as the last flow of funds before the net change in fund balances, so that's the correct placement. And then we see that they've properly included grant revenues and cleanup and presented those gross rather than netting the net impact of the infrequent or unusual item here. So a little bit of more information now presented on the face of the financial statements, and then some things to consider in your footnotes as well. I know for the most part, the clients we work with, these special and extraordinary items in the past came out pretty infrequently. So this is just something to make sure you don't lose sight of in a couple of years if you do have an unusual or infrequent event, that you're referencing back to GASB 103 for how to handle that. And then just a recap that this is required to be implemented beginning for fiscal years starting after June 15th, 2025. So that's effective for 6/30/2026, 9/30/2026, and 12/31/2026 reporting years. Earlier application is encouraged, and it does need to be treated as a change in accounting principle under GASB Statement 100. So all prior periods presented would need to be restated. One other item we wanted to call out here was that component units are required to implement GASB 103 in the same year as the primary government. So this could require some additional coordination across departments. Okay, and I will turn it over to Kiva for a polling question.
Perfect. Thank you so much, Anna. This is our third of 4 polling questions. Which component of GASB 103 financial reporting model improvements do you anticipate will most impact you? I'm sorry. Option A, clarification of operating and non-operating in proprietary funds and presentation of proprietary fund statements of revenues, expenses, and changes in net position. B, management disclosure and analysis. Discussion and analysis. C, budgetary comparisons. D, major component unit presentations. And E, unusual or infrequent items. For those of you who would like a copy of today's slide deck, you can download it from the folder that says slide deck and handouts. We will also be sending the slides via email after the webcast.
Excellent. Get those polls answered. No wrong answers. I think 103 is a lot to go through. It's not a statement to put off towards the last minute. I think from talking to my clients, a combination of A and B are maybe the areas of focus in the management discussion and analysis. Maybe not a lot of changes needed, but kind of going through that section with a fine-tooth comb and just making sure you are removing duplicate information and truly diving into the heart of why things are changing. It will just take a little bit of time, but maybe nothing too groundbreaking. Each of these pieces just takes a little time to go through and really identify what's applicable for your organization.
Okay, here are those results.
All right, awesome. Yeah, maybe you were influenced by what I said, but it looks like A and B, kind of the first 2 items that Jerry covered, are maybe where people are expecting the most impact, maybe the most time spent with adoption. So that's not a surprise to me. Hopefully you guys don't have unusual or infrequent items happening every year. Okay, now we're moving into just quickly cover GASB 104. This is a much smaller and simpler adoption, but this is focused on disclosure of certain capital assets. So this statement is aimed at making improvements to Statement 34, 87, 94, and 96 in order for information regarding certain capital assets to just be more consistent and comparable across entities. GASB 104 is effective for fiscal years beginning after June 15th, 2025, so it's the same adoption timeline as GASB 103. though again, earlier application is encouraged. So specifically, this is in note disclosures about capital assets. Information about the following categories of capital assets need to be disclosed separately. So this covers lease assets that are reported under GASB 87, intangible right to use assets recognized under GASB 94, and then those subscription-based IT arrangements, the SPIDAs, that are recognized under GASB 96. An illustration here, just to show you a little bit about what this could look like. So this is a table of capital asset activity in the footnotes to the financial statements. And the critical thing here is that they've called out separately lease assets and actually broken that down between the major classifications of assets within leased assets, so buildings and equipment. You'll see they have separately called out subscription assets, those SPIDAs, and then any P3 or GASB 94 assets would also be called out separately here. Another quick polling question. Turn it over to you, Kiva.
Thank you, Anna. This is our final polling question. Do you currently report leased assets separately from the other categories of capital assets in your financial statement disclosures? A, yes. B, no, we will need to update for GASB 104. C, I'm not sure. Or D, we don't have any leased assets. Once you have completed all CPE requirements, you'll be able to download a PDF of your CPE certificate from the CPE progress window.
Are you good with that?
Okay, get your polling questions in. So the nice thing about GASB 104 is this really is, again, focused on disclosures and just really a presentation of making sure you have these separately called out. A little bit of cleanup now that we've gone through adoption of 87, 94, 96, making sure that there's consistency across organizations on how those assets are making it into our capital asset disclosures and footnotes.
Okay, we have about 85% of responses in. For anybody who would like to submit your answer, please do so. Okay, and here are those results.
Excellent. Okay, well, it looks like maybe for a lot of the attendees, about half the attendees, there may not even be any updates needed if you're already separately calling out some of these items, but shouldn't be too heavy of a lift for getting those updated in your footnotes. And then there is a second component of GASB 104 related to capital assets held for sale. So under the new guidance, an asset is considered held for sale if the government has decided to pursue the sale of the asset and it's determined that it's probable that the sale will be finalized within 1 year of the financial statement date. Helpfully, GASB did include some criteria to evaluate in order to assist you in determining whether it is probable that the asset will be sold within 1 year. So some of the things to consider include: could the asset be sold in its present condition? Is there an active program to locate a buyer? What are the market conditions for selling that asset? And then any regulatory approvals that would be needed and the timeline on that. And governments do need to evaluate whether a capital asset is a capital asset held for sale each reporting period. And capital assets held for sale should just continue to be reported within the appropriate major class of capital assets. And then the government should disclose capital assets held for sale in the notes to the financial statements and make sure there's separate disclosure of the historical cost and accumulated depreciation or amortization by major class of those assets held for sale. And then also disclose the carrying amount of debt for which capital assets held for sale are pledged or pledged as collateral. And then the disclosure of assets held for sale should be made for both governmental activities and business type activities. And then just to recap, GASB 104 is effective for fiscal years beginning after June 15th, 2025. Needs to be retroactively applied to all periods presented in the financial statements. And with that, I will turn it over to Ashley to close us out with the implementation guide. Ashley?
It looks like Ashley might be having a connectivity issue. Is there, Anna or Jerry, are you able to take this section for her? Maybe she'll jump back in.
Yeah, I can step in here. Apologize for the technical difficulty here. Back in June, GASB had issued a new implementation guide for 2025. So you can go onto the GASB website and find this implementation guide. And we'll kind of give you like an overview of what's included in it.
Hey, Jerry, can we try again? I'm back, I think.
Hey, go ahead, Ashley. Back to you.
Sorry about that. The implementation guide, sorry for the technical difficulties there, does include 16 new questions that range in topics from cash flows, reporting, to basic financial statements, the MD&A, all the things that are listed on this slide. Consistent with previous guides, questions and answers are included to address issues raised by the GASB's stakeholders. So many of you through inquiries that are posed to the GASB, as well as issues that are identified by the GASB in anticipation of questions that will arise during the implementation of GASB pronouncements. The implementation guide does include 2 amendments to previously answered questions. Our recommendation is, of course, to just read through that implementation guide to identify the specific questions being included. And that's really to just confirm whether or not they're applicable to your governmental entity, and then consult your auditor with questions. When are these questions effective? Question 4.16, which specifically relates to GASB 103, which Anna and Jerry went through, is effective immediately. This question just reiterates that if a primary government with a year end of June 30, 2026 is including a component unit with a year end of December 31st, 2025, that component unit should implement Statement 103 in its December 31st, 2025 financial statements prior to being included in the primary government's June 30, 2026 financial statements. All other questions are effective for years beginning after June 15th, 2025, or those June 30, 2026 year ends and after. Again, apologies for the technical difficulties, but thank you again for your attention, and I'll hand it back to Kiva. I'm not sure if we have time for questions, but I'll let you make the call.
Thank you, Ashley. No worries on the technical difficulties. It does happen time and time again. Okay, so you know what? I don't think we have any time for questions here at the end. We'll just close it out. Thank you, Ashley, Jerry, and Anna for a great presentation today. If we didn't have time to answer your questions, we will do our best to follow up with you after the webcast. But as always, please feel free to reach out to any of our presenters if you have additional questions. We invite you to visit our website for more resources and the topics discussed today, many of which are linked in the handouts window. Finally, here's a link to a survey for today's presentation. Your feedback is always appreciated. Again, thank you for joining us, and take care, everyone.